Welcome to the Deal's 5th Annual Private Capital Symposium. I'm Mary Kathleen Flynn, and I'm talking with Gary Parr, who's the Vice Chairman of Lazard, and we're talking about sovereign wealth funds. Gary, let's just start with a sort of basic question, which is, why is there a rise in sovereign wealth funds, and how high do you think they'll rise?
Right. There are two real causes. One is the price of oil. And there are so many countries that are exporters of oil. So with the price now at $125 a barrel, there are massive flows of funds going into those countries. The second is our trade deficit, a U.S. trade deficit primarily, but also Europe into China and other manufacturing countries, but notably China. So those flow of dollars, and the negative to us is a positive for them, so their surplus is creating excess funds that they need to invest elsewhere.
How big are these funds, and how big are they likely to get?
Most statistics where people have tried to add it up would say there's some number around $2.8 trillion at the end of 2007. And at oil around $100 a barrel and our trade surpluses around where they are today, it would suggest that $1 trillion a year, order of magnitude, is being added. So it's entirely possible that the level of these funds by, say, 2012 will be something over $10 trillion.
Wow, so big ramifications, and some of them are political. Some people are threatened by sovereign wealth funds. Could you talk about that for a moment?
Yeah, it's certainly, you start with the characteristic, these funds are controlled by governments, virtually every one of them, so they are government involvement. But if you really cut through into the more detail, you'll find that most of them really are structured to get a return on investment. They're looking for investments where they can make money over a long time horizon. The one dealings we've had with the funds thus far, we've seen no political aspirations or desires. And importantly, many of the investments are structured in ways that they can't influence or control or exercise any form of influence. But there are the sensitivities that these are government-controlled monies, and as that money is put to work, what if the government changes its motivations or has other desires?
Have they been strategic investors then? It sounds like not.
They've been strategic in some way. They are a desire to learn. There is some number of these investments made. The funds or the countries, for example, would either want to learn something more about sophisticated financial services, or they might see an opportunity, say, for example, China investing in Morgan Stanley. They saw an opportunity to then also help Morgan Stanley move into China more aggressively, make more money in China, and as an investor in Morgan Stanley, they're a beneficiary, but so are all the shareholders of Morgan Stanley.
And where are some of these deals being made? Where are the sovereign wealth funds investing? I mean, geographically as well as by sector, perhaps.
Yeah, roughly, well, by sector in last year, over 80% of the investments have been in financials. So in 2007 and the first quarter of 2008, over 80% was in financial institutions. 50% of that was in securities firms. A fair amount of it was in Western banks, but about 30% was in Asian banks. So many times people sitting in New York or in London are mindful of the investments being made in big Western institutions, but in fact 30% went into Asia. So they are investing in growth markets as well, in fact very actively.
And what about here in the U.S.? Are they investing much here?
They have been. The level of activity accelerated mightily in the last 6 months of 2007 with the major investments like into Citigroup, Morgan Stanley, Merrill Lynch were the big ones. They were back to a level now. It's slowed down a bit, and there are more a flow into a lot of stocks. Many times we don't see it. It is important to note, if any one of these funds goes and buys Walmart or IBM in the open market, they can buy quite a lot of stock before anybody actually really knows, and they may have nothing other than just like any other investor. They own the stock because they think it's a good investment.
And Gary, before I let you go, one last question. What's ahead for sovereign wealth funds, and what should we all be watching?
Well, it's clear there's a lot more money going into the funds, so they will have money to put to work. We expect them to be investing in countries where they feel politically comfortable. They don't want backlash. They don't want to run into political friction. So countries that are, if they're sufficiently concerned and putting up barriers, the funds will go somewhere else. They are looking at an array of sectors. They will not invest as much in financials as they have in the past, but they will do it across a number of industries. And notably, we think they'll put a lot of capital to work in emerging markets, Latin America, Eastern Europe, and Asia.
All right, so watch for emerging markets. Thanks to Gary Parr for talking to us about sovereign wealth funds. And thank you for watching. I'm Mary Kathleen Flynn from the Deal's Private Capital Symposium.